does I traded GBP USD. This trade was yesterday, so on the 21st of April 2026. So as you can see on my 1 minute time frame, we have, this was the last low that came to big structure here. So I think price is retracing back to this low around here. So price is like making our lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So that's it. So as you can see, price just updated this place, but my directional bias is uptrend, so I did not try to take a short on this market. So the rules of the market is to go with the flow, make the trend your friend. So let's come down to 15-minute time frame. As you can see on our 1 hour time frame, we are already having lower high, lower low, lower high, lower low, lower. So let's go down to the 15-minute time frame. On the 15-minute time frame, you can see on the 15-minute time frame, price already gave us initially price was making lower high, lower low, lower high, lower low. So this was the last low on the 15-minute time frame. This was the last low here, right here. I came to break structure. Let's go down 5-minute time frame, because that is where I took the market. So on a 5-minute time frame, this was the last low that came to break structure here. So this is more like a protected low. So usually when the price is on a bearish downtrend and the higher time frame is bullish, so you want to wait for the lower time frame to be bullish so that you can buy. So immediately price broke above this high here, this lower high here. So I mapped out my market structure shifts. So that's how I do my own. I wait for price to break below the protected low or high before I determine that okay, there's a market structure shift. So immediately the market structure shifted, so price started making higher low, as you can see. So immediately my price broke through here. So price created, this was the last low that came to break structure here. So this was the last BOS. So price came back, mitigated it, and then went on to big structure here. So as you can see, price was gathering liquidity here. This is the demand zone here, serves as liquidity. This is supply zone here, serves as liquidity. So there was already a ton of liquidity here. So this is another demand zone right here. This is another demand zone right here, and it's also liquidity trap. So liquidity, so sorry, this is supposed to be liquidity pool, not liquidity trap. Liquidity pool. So that's it. So all these are liquidity traps. So I have to, like, as you can see, this was this demand zone has already been mitigated, as well as this one. So they are all where the traps or the liquidity has sitting down. So this was our last low that took out liquidity, took out this low before going on to break structure here. So it was where I marked out. So before price reached this liquidity pool, price already generated liquidity here. There is this one liquidity, this is another demand zone for liquidity. So you can see immediately price tapped into the zone. Price give us a week, that's a rejection week, and then went on to smash our take profits. Now the reason I had to put my entry here is because sometimes price just taps into the fair value gap and then go on, or sometimes price just sweep liquidity on this demand zone just with a week and then go back. So I have to, like, place my entry on the fair value gap here. So price tapped in and then boom. So the reason why I placed my stop loss here below this low is that this was the initial low that went to break structure, that took out liquidity and went to break structure. This low here, this lower high here, brought about all these places. And as you can see this my liquidity pool here it has already mitigated this demand zone here. So I have to like place my stop loss here, because at most price will like want to sweep this demand zone right here, and then with a week and then go. So that's why I place my stop loss below this low. So the reason why I place my take profit here is because this is the demand zone here. So I'm acting according to what the market says, and they already have liquidity here. So this demand zone right here has the tendency to push the market back. This demand zone right here, any demand zone, any supply zone right here, any supply zone, any demand zone can work in the market. So you just like you don't assume, you don't have a fixed take profit. You just do according to the market. If my take profit was supposed to be according to the market, I'm going to put it here. So that's why I put my take profit at the next supply zone. And as you can see, when market got there, we got a reaction. So next time it would have been possible that we don't have only a reaction. The market is liable to push. This supply zone is liable to push the market down. So that's why I just placed my take profit here. As you can see, we got a reaction here, and eventually price broke through it. But as a trader, you have to stick to your plan. So the supply zone right here was responsible for bringing the market down back here. You see, guys, I was right about this demand zone. After all, price came down back here, almost took us out. That's happened today, but this market was yesterday, so I've not traded today. So that's it, guys. My strategy is liquidity trap, liquidity pool, follow the trend, and boom. So I followed my plan throughout. So that's it, guys. Thank you, guys. Thank you for watching us.